Well, good afternoon to everybody. And Maurice Jones is actually on the phone with most of you all. So this is a new adventure for us. Cliff, if you can hear me, and I hope you can, my apologies for not being there with you, my friend. But I'm with you in spirit, and hopefully we're going to have a conversation virtually now, which marks the new world. I believe you have Amani there with you. And Amani, I don't know if you want to chime in to begin with, and then I'm going to introduce Cliff to our audience.
Wonderful. So thank you, everyone. Good afternoon. Thank you for joining us. So I'm here live. I am one of the program officers for knowledge management, and I am here joined by Cliff Rosenthal today. As was mentioned earlier, if you have any questions throughout the presentation, you can send them in via the Q&A function, and towards the end, we'll be opening it up for questions. We'll approximate about 15 minutes or so, and I'll turn it back over to you, Maurice, to introduce.
Absolutely. Well, I'm delighted. We've got a real treat today. We've got my friend Cliff Rosenthal with us. Cliff and I go back to at least 1995 when I had an afro and his hair was probably less gray, but he has aged and I have. Well, let me tell you a little bit about Cliff. Cliff is a New Jersey young man born and raised in Newark. He was trained as a Russian historian at Columbia. He was a co-op organizer in the 70s through 1980. He joined the National Federation of Community Development Credit Unions in 1980, and 3 years later became the CEO of the Federation. From 83 to 2012, he basically rebuilt that federation and turned it into a powerhouse in the development finance world, as well as the credit unions that were members. And he also co-founded the Cdfi Coalition. And then in 2012, he went over to the Consumer Financial Protection Bureau to launch their Office of Financial Empowerment. And since then, Cliff has been consulting with credit unions and writing, which is why we're here today. He has written what is probably now the definitive history of the development finance industry in the country. And I'm going to turn it over to Cliff now and let him chat, and then I'll come back on and try to ask some questions. So, Cliff, welcome, and it's a delight to have you.
Thank you, Maurice. It's my pleasure. We do indeed go back to almost exactly 1995, and wish you were here in person, but you're coming across loud and clear. So this is a book of history, but let me start from the present. As you probably know, there are more than 1,000 of these things called Cdfis today. The assets in aggregate are estimated to be 150 billion, 175 billion, and so forth. So my basic premise was there's something there. This is a thing. By many measures, Cdfi has been a great policy success. So why write this book? Success stories are very often taken for granted, it seems to me, but I think they have something to teach us. I want to flash back to 1990 when there weren't 1,000 substantial Cdfis. We were literally inventing the term around 1990, 1991. And what was the we? Well, the we was several dozens of credit unions serving low-income communities. It was a handful of community development revolving loan funds, which formed their association in 1985. There was Shore Bank, the progenitor of all community development banks, and for a long time the only one. There was Southern Development Bank in Arkansas, and the newly started Community Capital Bank in Brooklyn. And then, of course, there were LISC and Enterprise as well. So why tell this story, this story of evolution? First of all, it seems to me that there's at least one generation, and maybe two, that have grown up and in a way taken Cdfi for granted, particularly for some of our younger colleagues. Cdfi has always existed. Well, that's not really the case. So I told the story, and if I had one audience in mind that I especially hope to reach, it is the younger generation, because we do get a lot of questions as to how this all came about. So hopefully there is some appetite for learning the history of this movement. I told a story as well for my generation, which I'll call the founders generation, and we're moving off the stage. We who have built this field. My peers are retiring, and increasingly some of them are passing away, including several people who've been very prominent in the Cdfi movement, particularly like Jeremy Nowak, most recently, who many folks know. It's an attempt to sort of memorialize the story and what we have done. On a personal note, and this goes back to Maurice's introduction, for me, after many decades working in credit unions, cooperatives, and community development finance, before all of this, I was trained as a Russian historian, and in a sense, doing this book completes a great circle in my life. So let's move on to this. There's a 200-year history of financial exclusion in the United States, based on race, based on geography, based on income, for sure. Similarly, there's been a 200-year history of efforts to address it. So what I've tried to do in this book is to look at Cdfi in historical context, to try to identify the threads and themes that run through this history, and to tell some stories that have been forgotten, some that have never been told. It took a lot to develop this Cdfi movement. There are 1,000 stories here. So I'd like to, in the book, also provide a fresh look at some of the predecessors of community development finance and how these efforts have influenced and, for better or worse, contributed to the evolution of community development finance. In trying to think about the various efforts over the decades and the centuries, really, I basically looked at them through sort of three-part prism. That these efforts originated in philanthropy, they originated in federal interventions, or in grassroots or self-help efforts. Sometimes all of these strains mingled together and worked in combination, and I think that's actually, in good part, attributable to the success in the emergence of the Cdfi movement. It was an interweaving of these streams of philanthropy, federal intervention, and grassroots and self-help. So the story starts, like many stories in American history do, with Benjamin Franklin, who, as every school child knows, invented electricity, invented the postal service, invented fire departments, was ambassador to France, and in his spare time invented the internet. But what this book is about is not so much a penny saved as a penny earned, as important as that was. But Franklin, in a sense, was the father of microenterprise and social investment in the United States. How did he do this? Well, in his legacy, he established 2 revolving loan funds to basically provide startup capital to poor artisans like himself. He was the 11th of 11 children, started in a poor family. So he started these funds, one in Boston, one in Philadelphia, with a notion of sustainability. He could have just given his money away to needy artisans, but he wanted to build something sustainable. So instead, he basically establishes revolving loan funds that make loans at 5% interest. A century later, philanthropy at 5% becomes actually sort of a watchword of the movement, the philanthropic movement. The largest and most ambitious and ultimately tragic federal intervention of the 19th century was Freedmen's Savings and Trust for African American Civil War veterans who had salaries that they collected and bonuses and had no place to put the money. This extraordinary effort grows enormously. It grows virally to 17 states, 30 branches, 70,000 depositors, $55 million in assets aggregated from African American Civil War veterans. It grows enormously. It's a source initially of great pride, but as a result of mission creep, it devolves into speculation and fraud and the economic crash of 1873, which brings it tumbling down. They bring in Frederick Douglass to try to save the institution, but in his words, he said, "I was married to a corpse. The fine building was there, the branches and so forth, but there was no money. He could not save it." 35 or 40 years later, W.E.B. Du Bois writes that the downfall of the Freedmen's Savings and Trust did more damage to the black community than an additional 10 years of slavery. I jump from there to explore the roots of the credit union movement in the early 20th century, which is a fundamentally democratic, populist, working-class movement. It's bankrolled, in fact, by a philanthropist, Edward Filene, which my generation will remember for Filene's Bargain Basement store. Many of you go to Amazon instead, I expect. And he literally bankrolled organizers to go around the United States establishing credit unions. This movement was basically spurred by his perceptions that his workers at his department store every Friday would go to the gates of the plant and basically be encountered by usurers. And he thought there had to be a better way. The credit union movement takes off. Literally, these organizers go into a town, they sit with half a dozen people from a factory, and by the end of the meeting, a credit union is formed. It's a lot harder now, I can tell you that. So the movement assumes huge scale in the United States, grows virally, and by the mid-20th century, despite, and in fact, perhaps because of its success, and that's a theme that I try to explore with Cdfi as well, it encounters mission drift. That it's somehow easier to establish credit unions that serve the middle class rather than the poor. The 1960s are sometimes described as an era of a rediscovery of poverty. The United States, after World War II, eventually enters into an era of considerable prosperity, but lo and behold, by 1962, David Kaplovitz writes a book called The Poor Pay More, which is a fundamental insight into the economics of inner city areas and how everything from credit to basically buying your groceries is more expensive. So we see the war on poverty from 1964 to 1968 under President Lyndon Johnson. And this spurs the creation of hundreds of community action agencies around the country, some of which may still be in your network, as a matter of fact. With all good intentions, the architects of this initiative in Washington identify access to capital as an important problem for low-income communities. And learning a little bit about credit unions and self-help efforts, they decided it would be great if hundreds of these community action agencies had credit unions. So they set about to more or less mandate that these institutions be established. They provide nothing in the way of startup capital. It provides some operating support year to year, no management support. And all of us who've been working on capacity development, I think, take a lesson from that. And they expect these institutions serving only the poor to become self-sufficient in 2 to 3 years. So many of them fail. Many still survive for many years, but the failures really brand the initiative of the war on poverty in a very negative way. This despite the fact that I think there are many valuable lessons that we learned, that we had to learn as we moved to create the Cdfi fund. By the 70s, you see the seeds of new approaches being planted. The first community development bank is formed, which is South Shore Bank, of course. My own organization of low-income credit unions, the National Federation, continues the fight to bring access to capital to low-income communities. First, we have to fight for deposit insurance. Deposit insurance, federal deposit insurance, did not exist for thrifts and for credit unions prior to 1970. And when it comes about, low-income credit unions, which are poorly capitalized, are not going to be given access to deposit insurance, which would have been a death sentence. So my predecessors fight first for deposit insurance, and then they wage a decade-long campaign to try to establish a federal fund to bring capital to these communities. What we see in the 1970s is something, again, one of the untold stories that I call the Cdfi fund that wasn't. There was a little-known effort to establish what really would have been a national community development banking system featuring community ownership and topped off by a national central community development bank that would be in the business of licensing or certifying local community development banks and helping to capitalize them. So the legislation actually gets dozens of sponsors, but it doesn't take off. So the CDFI fund does not emerge in the 1970s. It takes another 20 years to get there. In the 1980s, the institutions that really built the CDFI field begin to take shape. South Shore Bank grows. Southern Development Bank in Arkansas is started with help from both of the Clintons, Bill and Hillary. And you see a National Association for Community Development Loan Funds being formed in 1985. It was the only organization that had a longer name than my own. It's the National Association of Community Development Loan Funds, later to be known as National Community Capital Association, and more recently as the Opportunity Finance Network. So they form in 1985. LISC takes shape, and the Enterprise Foundation as well in the at the turn of the 1980s. So what I was engaged in, and what my organization was engaged in throughout the 1980s, was continuing this battle that we waged for federal investment into financial institutions that serve poverty communities. Where does the initial lending capital come from as we're trying to establish a private sector intermediary? And this is a story that's shared by so many of the startup CDFIs of the era. It comes from Catholic women's orders, from congregations, like the Adrian Dominican Sisters. In our particular case, late 1982, we announced that we were going to establish a capital intermediary. We have no track record. We have no capacity. We are literally bankrupt. And we go to the Adrian Dominican Sisters, who say, we will loan you $30,000 without collateral, taking the pension funds of our sisters. And we'll loan it at below market rates. We don't have covenants and warranties and so forth. We have one rule: pay us back. And to my knowledge, every CDFI that is borrowed from the women's orders over these decades has in fact paid them back. So those were sort of the roots of it. By the mid-1980s, program-related investing, particularly as championed by the Ford Foundation and then later MacArthur, begins to take off. We see Community Reinvestment Act increasingly becoming a tool for challenges, for CRA challenges, and so forth. But really the ground for the CDFI initiative is prepared by a number of events in the late 1980s. One of them is the collapse of the savings and loan industry. Because of deregulation, you saw among hundreds of savings and loans the spread of fraud and speculation that results in failures on a mass scale of hundreds of these banking institutions, leaving the U.S. government with a potential bill of hundreds of billions of dollars. So this has sort of shattered the myth of banks as being these conservative ivory tower institutions that are taking prudent care of your money. So that's a big blow to banks. 1988, late 1988, a series of articles was published in the Atlanta Constitution and Journal. It wins the Pulitzer Prize. It's called The Color of Money. And basically, it documents mortgage lending discrimination against African Americans in the Atlanta area. And it's essentially all but irrefutable. So meanwhile, my organization is continuing our push for federal capital. I wrote a paper in 1986 that in very sketchy form calls for the creation of something that we call then the National Neighborhood Banking Corporation, or the National Neighborhood Finance Corporation. Over the course of the late 1980s, we tried to bring in some allies who are not necessarily jumping at the opportunity, but by 1990, NACDLF, the loan funds have evolved, and we put together a coalition to advocate for a federal fund. What really raises the stakes of this a little bit later is what happens in South Central Los Angeles. But let me jump to what's going on in the presidential campaign of 1991, where Bill Clinton, who helped establish Southern Development Bank, formulates a platform of creating a network of 100 community development banks and 1,000 microenterprise funds, inspired by Shore Bank in Chicago and Grameen Bank in Bangladesh. He takes his campaign to late night TV, where he plays the saxophone, and in his sunglasses plays a Heartbreak Hotel by Elvis Presley, and then begins to talk about community development banks. He goes on MTV. He's interviewed by the Rolling Stone magazine, and his campaign gathers support. Meanwhile, on April 29, 1992, South Central Los Angeles goes up in flames. It's triggered by the acquittal of police officers who stopped Rodney King, an African-American motorist, and beat him in a way that was captured on video and went viral. Seeing this, South Central erupts in days and days of rioting and burning down buildings and so forth. So basically, this elevates the distress of urban communities on Congress's agenda. We take our case to Congress in 1992. We introduce Congress to these CDFIs. Honestly, what were we talking about with them? We were talking about the experience of a few hundred very small credit unions, several dozen loan funds, which had great loan loss records of 1% or less, but only had a track record of about 5 years. There was South Shore to point at, but as a pilot program, it wasn't necessarily that impressive. Nonetheless, Clinton wins in November 1992, and things move into high gear. Our CDFI coalition begins meeting with Clinton Transition Committee, with subsequently the Domestic Policy Council, the National Economic Council as well. And in a very early priority in the Clinton administration, draft legislation is prepared. So on July 15th, 1993, dozens of us are invited to the White House Rose Garden for the introduction of CDFI legislation. This is our moment in the sun, and everybody who was there remembers it pretty vividly. The president is there, the vice president is there, 40 members of Congress, 6 cabinet secretaries, Jesse Jackson Sr., and us, who had come from here, there, and everywhere with our quite small programs and our CDFIs. So the path to creating CDFI legislation takes about 18 months. It winds its way through Congress. It encounters various threats. The Whitewater investigation of Clinton threatens to derail it. There's an effort to establish the Bank Enterprise Award Program that former Congressman Floyd Flake from Queens champions. And in fact, he outmaneuvers the Clinton administration, and consequently, a third of the CDFI appropriation is set aside for the Bank Enterprise Program. The program is making its way through Congress. It's passed into law in September 1994. Things look great. 6 weeks later, Newt Gingrich's Contract with America and Republican Revolution takes control of both houses of Congress, the majority of state houses around the country, and so forth, and there begins pretty much a pitched battle with the Clinton administration over budget. It basically culminates in the first shutdown of the government in the fall and winter of 1995, and that's when Monica Lewinsky enters the scene, though she has no direct relationship to CDFI. But what happens over the course of 1996? The fund gets started in 1996. It makes its first awards, about $35 million worth of awards, and we're pretty happy with it. A year later, though, a Congressional Oversight Committee comes in and determines that certain actions, certain financial assistance actions have not been documented properly, and they declare that this indicates that this was a slush fund for Bill Clinton, and it was just another evidence of Clintonian corruption. So then Maurice Jones, as cited in my book, and I'm sure he remembers it, begins with a series of daily treks up to Capitol Hill to educate Congress about this Cdfi fund. Maurice,
that's the exact moment that my hair began to leave me, right?
It must be quick because I don't remember the afro, Maurice, I've got to tell you that. But what I do remember when I interviewed you, I said, wasn't this incredibly painful? And what you told me was that it was actually extremely beneficial because you got the opportunity to educate a lot of people on Capitol Hill in a way they might not otherwise have been.
Very true.
So, better be true since it's in the book now, Maurice. So except for a brief challenge under George W. Bush, who launches his Strengthening America's Communities Initiative, which in fact is an effort to condense and collapse and eliminate community development programs. The Cdfi fund lives a pretty much unchallenged existence. So what has this all meant? Basically, I do believe that the Cdfi and the Cdfi fund has been an important public policy success story, that it has benefited from the lessons of the past and has become an extraordinary example of bipartisanship. As many of you know, for the last 3 years, the Trump administration budget has called for essentially the total elimination of the Cdfi fund. And in each case, Congress has provided an appropriation that has been basically at a historically high level. But in my perspective, the Community Development Banking Initiative has done much more for community development and less for transforming banking. The Cdfi era, if you will, of more than 20 years has seen massive bank consolidation and sharp declines, specifically in the numbers of African-American banks and credit unions by at least half over recent years. During this whole period, payday lending, which basically didn't exist before the early 1990s, has flourished and become a multi-billion-dollar industry, along with predatory lending in various forms. Millions of American households remain unbanked or underbanked. So my critique, if you will, is this, that the initial language for creating the Cdfi fund called for the funds to consider in its investments, quote, whether the applicant is or will become an insured community development financial institution, which essentially means a depository, a bank or credit union. In fact, virtually none of this has taken place, none of these transitions. The financial assistance awards of the Cdfi funds, 80 cents out of every dollar over its first 20 years went not to the depository institutions, the banks or credit unions, but rather to non-regulated, non-depository institutions. The other challenging issue that I think that it's timely to address is how far the Cdfi field has come in terms of fostering democratically structured institutions. Again, the fund statute called for it to consider in its award, quote, the extent to which the applicant is or will be community-owned or community-governed. So the question for all of us is, has this field, as it's grown, promoted these ends and given voice to the communities that they serve? There's no question that Cdfis of any type are for the people, but many are not, in my language, by or of the people. My model, and again, here is my bias, that true democracy lies with structures such as credit unions, which are based on the principle of one member, one vote. You've got, a membership in a credit union. You get to vote for the governing board of this institution and set its policies. I think that the Cdfi fund has been tremendously helpful in its work with native Cdfis as well, which has basically put capital in the hands of tribally and community-owned institutions, in contrast to the Bureau of Indian Affairs or the various trust arrangements, which basically were charged with controlling monies that otherwise should have gone to Native American communities. So to wrap up, the Cdfi fund is approaching its 25th anniversary, And what I really hope is that my book will be an initial piece that stimulates a vigorous discussion of these and some of the other questions that I've put out there. Again, community development finance is in many ways one of the most successful efforts ever to address financial exclusion. It's not been simply another federal program that provides operating funds year after year. Cdfi and this field has helped build institutions, lasting institutions. The question is, where do we go from here? Thank you.
So Maurice,
Terrific. Yes.
you're going to kick it off with a couple of questions.
Let me kick it off with a couple of questions, Imani, then I'll turn to you all.
Okay.
And then you can take it, you can bring it home. Cliff, let me start. First of all, thank you and congrats on this incredible accomplishment. And frankly, just thanks for your service in this space. I know it close up because I've seen it, and I know the role you've played. And forgive me, I'm in an airport if you can hear background noise. But let me kick this off, Cliff, with where you left off, which is looking forward. What would you advise folks like LISC and others who are in pretty good places in the development finance industry? What should we be working on to perfect or to continue to work to perfect or create a more perfect development finance system in the country? Given the origins of this and where we are now, what two things would you tell us to prioritize for the next 10 years?
Great. Well, I guess this reflects my bias again. I'm sure that LISC represents an extremely diverse network of organizations locally. I think it would be appropriate to look at the ways in which the communities that you're serving, have input. There has been a kind of a tension through from the 1960s, really. During the war on poverty, there were two schools of thoughts. One of which it was encapsulated in the slogan, maximum feasible participation of the poor, and it accompanied a thrust for community organizing. Another was less enamored of community organizing or community participation, and thought the task was basically to be improving the quality of life through coordinating services. So, how do you find a middle ground of this? I mean, I would basically say look at your diverse models and see if there's any opportunity to increase the level of community participation and decision-making that takes place in the local levels. I guess another big challenge, and I don't really have an answer for this so much, is financial technology. It's very promising in terms of bringing basic financial services to lots of folks who may not be using them up to this point, but it comes with its own challenges. Whether it will be as effective in providing reasonable credit and appropriate credit to low-income communities is still a bit of an open question for me. So I think that your own engagement in financial technology, I think, could have some lessons for all of us.
Yep, I appreciate that. Let me throw another question out, and then, Imani, I'm going to turn it to you. Cliff, you and I have had this dialogue, but, where this all started was with the history of exclusion, in particular, traditional financial institutions excluding communities of color from access to needed capital. One thing that we still see in this field itself is a lack of leaders of color in the movement. While it has gotten better, and I'll put that out there I should put that out there as my observation. But I would ask, one, if you agree with that, and two, why do you think that is, and three, what can we do about it?
Sure. I think that diversity, I think that the Cdfi field has been challenged by diversity, quite frankly. I see
what do you think that is?
Well, I don't know. Maybe if you go back to the very roots, I think there was a fragmentation. First of all, there was the credit union movement was rather distinct and apart from the loan fund movement, which was primarily spurred and promoted and developed by essentially non-African Americans, non-Latinos, essentially white folks during that period, and they remained in the leadership for decades and built their movements and so forth. So you look to some degree of the roots of it. I think that there's been increased self-consciousness about the lack of diversity and increased dialogue over the last couple of years, and I think that's a good thing. I think that, to some degree, we may be victims of our success. In our credit union movement, for example, we did employment training. We trained people at credit unions and so forth, mostly minorities at that time. We trained them, and we had federal funding for this. The goal was to keep people in a program for 6 months, and then they would be ready for real employment. The fact is, we trained them, and they got snapped up by banks before that, after a month or 2 months and so forth. This was regarded as a failure on our part because we didn't meet the milestones in our employment contract. But taking it to this field as well, there's competition for talent. Some CDFIs pay market rates, many do not. And I think many of the people, we've seen movement back and forth, some bankers moving into CDFIs, but also talented minorities and others from the CDFI field moving into banking. So I think that has been an issue as well. And I guess my concern, and I stressed this earlier, is the decline in the number of African American financial institutions, both banks and credit unions. The number of African American led banks declined from about 48 to about 25 over the last 15 years. There are no numbers on the numbers of decline of African American led credit unions, but I can tell you from my experience, it was, it has been really, quite sharp. So that's one part of the story as well.
Yeah, agreed. No question about it. Last question for me, Clifton, I'm going to turn it back over to Imani, is talk to me, give us a sense of where the rural access to credit experience came into play, if at all, in the origins of the community development of financial institutions movement, if you will. Was the question of was the rural experience one that shaped the early days, or was that one that did not have the voice at the table that is, if you will, proportionate to the challenge and the number of people living and wrestling with issues there?
Yeah, I think, as you know, rural communities, particularly, but not only in the South, have had a hard time accessing capital, and many of them that fall outside the CRA footprints has meant that they haven't had access to bank capital as well. But if you look at some of the early organizations, of course, you had Southern Development Bank, which very much had a rural focus. You also had the Center for Community Self-Help in North Carolina, which was based in the Research Triangle, but primarily served rural communities around the state. So those voices were there as well. But I do think that rural communities long did not get a proportionate share of what's needed for community development finance. And I think it continues to this day. I mean, you have a number of very strong voices now. Bill Bynum from Hope Enterprise Community of the Delta is obviously one of them, who's been extremely influential, but it remains a continuing concern.
Yeah, it's one that we want to continue to add value to. Cliff, thanks for taking my questions. I'm going to let Imani now curate the questions from the audience. And also, Cliff, I'm going to say thank you. This will probably be the last time you'll hear my voice, but thanks. I'll follow up. I'll look forward to getting together. And like I said, congrats on this singular achievement. And so, Imani, I'll turn it back to you.
Thank you, Maurice. So thank you, Cliff. In terms of the, like, our responsibility as practitioners in this space, what would you say is our responsibility, taking into account the historical context of what has brought us to date and working with the communities that we live in and that we work on behalf of?
I guess this movement was born to take risks that banks are not comfortable with and don't generally take. I think the big challenge is to retain that edge, really, to be out there taking those sorts of risks, and it's not to default to what works best in raising capital. I mean, I think you've got to be as close to the cutting edge as you possibly can.
And then I guess with that, you mentioned risk. So there are banks that traditionally and historically have not loaned to communities of color, more specifically because of the risk that's associated with that. So where are we positioned in that, knowing that the context of just like the history of this country has set apart groups that have not had the same access to capital, and as you mentioned, like the erosion of minority-owned banks, like what, in terms of that risk, can you just speak a little bit more to that?
Yeah, it's a little distressing that after all of these decades, I mean, I think there's a good argument that CDFIs have now been demonstrated proof of concept that it is possible to loan to these communities. I think that we suffered at least a temporary setback during the Great Recession, when banks very much took a step back in their own risk profile as well. So at this point, I think that CDFIs are entering, well, let me stay into a mature stage that are, that the net asset levels of many CDFIs, other than the depositories, who generally operate at a net asset or net worth level of between perhaps 7 and 10%. You see lots of non-regulated institutions with net asset levels ranging from 25, 30, 40, and even 50%. I think that it basically is an argument for taking greater risk, number one, and for increasing the leverage, for going out and increasing debt capital.
Thank you. Before we open it up to questions in the audience, I know that you mentioned that one of your intents was to actually reach a younger generation because of the change in the pipeline for the sector. So how do you, what has been the reception, I guess, from the younger generation with your book and with your history to date?
Well, anecdotally, I hear people are interested in this stuff, and they don't know about the origins of this movement. I guess that's something that I hopefully will discover through meetings like this and so forth, whether there is some sort of resonance, whether it does connect with folks. People didn't go into CDFIs as careers in the 1980s and 1990s. And the good thing is that you can have a career in CDFI now. Lots of institutions, various ways to use your skills and so forth. I guess what I would hope for is that along with doing good work and having a career in CDFI, that people sort of catch the fire and find a way to immerse themselves in the sense of mission that historically has been central to the CDFI movement.
Thank you. Any questions in the audience, as I also monitor questions that are in the chat? Okay, so there's a question from Philip. What could or does it take to, in practice, for banks to incentivize CDFIs to promote community-led decision-making, engagement, et cetera, using financing, grant, or equity vehicles?
That's interesting. The question is what banks would do to incentivize? What
does it look like in practice for banks to incentivize CDFIs?
Okay, well, I guess I have never really thought about that question, what the bank's role would be. What does come to mind, though, is when Ford Foundation used to, and maybe still does, provide grants and program-related investments. They ask specifically about the composition of the boards of directors of the recipient, the minority composition, the gender composition, and so forth. And it seems to me, if you had a question such as, really, what is the community participation? How are these people engaged there? I will tell you that I've been on several New Markets Tax Credits advisory boards as a, quote, community representative. And while I appreciate all the great work that several of them have done, I was not that close to the community. I was, ran an association of organizations. So I think it's possible to ask those questions, and I think the responses might be quite interesting.
Anyone here? 1 second for the mic.
So what can banks do using their CRA requirements to strengthen the Cdfi world? I mean, is that a vehicle for, because I know they're supposed to be investing and lending, and so just curious if that's a dead end or something that might actually be a tool.
Yeah. No, I mean, clearly the most valuable thing banks can do is to provide investments in CDFIs, equity, in debt, and so forth. I think that probably they have a role in terms of convening the various actors in some of the communities that they work with and bringing groups together and trying to help achieve some synergy there as well. But I do think that the real agency, the people who are doing it are at the CDFIs themselves, and ultimately should not really be looking to banks for those sorts of incentives or directions. We know enough as a field at this point to be doing it, I guess is what I'm saying.
Another question here is, if you can name a meaningful way that intermediaries like LISC can actually partner with the remaining Black-owned or minority-owned credit unions?
Yeah, I think it's probably happened anecdotally here and there, but probably not in a systematic way. So we do have credit unions in inner cities like Detroit and so forth, and I don't think, credit unions have not sort of been the most natural partners of banks. That, believe it or not, even quite small credit unions have been perceived as competitors by some very large banks. As an industry, community banks particularly regard credit unions, which are not federally taxed, as a competitive threat. So it has never really been sort of a natural sort of alliance. In terms of minority banks, particularly, again, to some degree, there's the competitive barrier that banks perceive. In some instances, banks have been, crucial investors. In the late lamented Freedom National Bank, of course, the major banks invested in that in a way that was absolutely crucial for many years.
And here in the audience.
Hi, Cliff. Connie Max, former Shore banker. I'm curious, when this all started, there were the foundations, the MacArthur, the Ford Foundations, but today there's the Gates, the Waltons, the Zuckerbergs. Are you seeing a shift? Do you think that's going to shift our movement to just very high net worth individuals choosing what their passion is and kind of driving our industry with their interests or what they see as the need?
Yeah, I think it's a challenge for CDFIs to access that world. So there's the field of impact investing that has emerged. I don't know that they've naturally been as enthusiastic about CDFIs as intermediary institutions as many potential investors are in sort of the end project or product or community as well. So, I mean, I think I hear from time to time a frustration among CDFIs about, the inability to break through to those major sources of capital. I think that the Gates Foundation is looking at issues of access to banking as well, so maybe doing more in that area. I guess what I think was the great accomplishment of CDFI was building institutions. Again, to those who may be more interested in what did this CDFI do rather than who they are, that has sort of worked against us in how the field is perceived.
Another question online is if you could speak to successful models of community-led investments, maybe that you've seen over the last decade or so.
What I would like to put on the radar here is what's an emerging project that I think has a lot of resonance, and this is in North Minneapolis. North Minneapolis, as you may know, has been the site of two killings of unarmed African-American civilians over the last few years. And the Association for Black Economic Empowerment, as part of their efforts to basically, get a voice in the city and to advance, their agenda of empowerment, have decided to organize a credit union. And they've taken the first steps. They've done some, non-credit union lending as well. The city council has just made a commitment of them. But I guess what I would hope to see in the future is more instances of, merging the fight for economic justice with the fight for civil and political rights. That has been, it's one of the streams that fed certainly the credit union movement in the South. And I talk about this in the book, that in a number of rural communities in Alabama and Mississippi, to be engaged in the 1960s in registering people to vote meant basically possibly being put off your land, or if you were sharecropping land as well. So the intertwining of civil rights and economic justice and economic advancement, I think there is something that we have to be constantly aware of, and really, however we can, in whatever way, keep those, fuse those, and try to advance those.
Thank you. Are there any other questions in the audience? Okay, we have some more.
Cliff, I just have a question about leveraging financial technology. You had alluded to it briefly, and I'm curious what trends you're noticing in the financial technology space, and if you have any insights into them and sort of any examples of how CDFIs are leveraging financial technology to advance and increase access to capital.
Yeah, I think that some CDFIs are hooking up with some of the internet-based lending operations. I think perhaps Lending Tree, maybe one. I think Opportunity Fund in California has done a fair amount of that. Credit unions are sort of a different notion. I mean, they have an urgent need to adopt financial technology as well. There is probably not going to see a whole lot of partnerships between those sorts of between credit unions and the non-depository fintech organizations up there.
There's another question on how can community action agencies work together with CDFIs?
I think, okay, again, in the 1960s, community action agencies were sort of a breeding ground for credit unions and for various, actually, loan funds as well. I think that one of the, other than equity investment, which I think was the absolute uniquely important contribution of the CDFI funds in the field, there's the emphasis on development services, which involve a whole range of non-financial services that help people get or keep current their loans and so forth. The financial counseling, the business planning, and so forth. I think that many community action agencies would be well equipped to work in conjunction with CDFIs, providing those sorts of services.
And if you, as we wrap up, if you were to give us a charge, I know that you mentioned, like, where do we go next? If you were to give us a charge to reflect on the work that you have done, what would it be?
That, and I tell this to credit unions as well, why does the work we do matter? Is it the loans? Is it the number of square feet that we create and so forth? I think the most important thing is essentially, our most important product is democracy. And this is an age where, you know, from my perspective, the thirst for democracy is strong and growing, particularly among the younger generation as well. So find channels to engage people in your communities. You exist not simply to serve them and to improve the quality of their life, important as that is, but to engage them and to empower them and to build their sense of agency in whatever channel and whatever way you can.
Thank you, Cliff. Thank you. So thank you, everyone, for joining. We will share this recording with the registrants, and we hope you enjoy the rest of your day.